Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dr. Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, to discuss what the Nasdaq-100 Volatility Index indicates about Nasdaq-100 performance going forward. Russell, before we get into that, I just want to get your take on some of the news last week. I know you were out of pocket last week, not even in the States, but I'm sure you saw all the news, especially around Silicon Valley Bank. What insights do you have around that?
Well, it was kind of fun to be, as you mentioned, out of pocket. I was over in London leading a study abroad, and we saw the news, but we weren't really looking at the markets that much. We were doing a lot of other things. So Wednesday morning, when I got the students together, I surveyed them. I said, what do you think the U.S. stock market has been doing in reaction to all this? And the consensus was we were down 5 to 10% based on the news. We were actually higher, and we were led higher by the Nasdaq. And I use that as kind of a teaching moment about systematic versus unsystematic risk. And this Silicon Valley Bank thing really is an unsystematic risk or a company-specific event.
How did this show up in the markets?
What's really interesting is the Nasdaq versus the S&P 500 performance last week, which I was just catching up on when I got back this weekend. And the Nasdaq was up almost over 5%, up almost 6%, while the S&P 500 was up 1.4%. And I find this telling with respect to the big call for a major economic slowdown. If you're going to expect a major economic slowdown, you're going to expect stocks that are very exposed to the economy, like technology stocks, the majority of what's in the Nasdaq-100, to underperform and reflect that. And that was not showing up, and it wasn't showing up even on Monday last week when the market was digesting the Silicon Valley Bank information.
And you're always watching the volatility markets. What is that space telling you?
Well, and beyond that, another thing that I found somewhat surprising, I like to pay a lot of attention to VOLQ, and definitely VOLQ versus VIX. Historically, there are periods of time where VOLQ is at a discount relative to VIX. It has been at a premium for several months, with maybe just a couple of small exceptions, which has been an indication that there's concern about technology stocks. But it is working its way down. And last I checked, there was probably less than a point spread between the two. Again, I'm not just talking about the NDX, but the stock market as a whole. As long as the Nasdaq is outperforming and it doesn't appear that there are forward concerns regarding the Nasdaq, I think that we might be in the clear for stocks overall.
All right, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.